All right, so how to backtest a trading strategy. I want to show you my 3 best behind the scenes secret. Now, let's talk about backtesting. What is backtesting? Does it make sense to backtest a trading strategy? What are the pros? What are the cons? And what do you need to know when backtesting a trading strategy? So let's get started. Number 1, what is backtesting? You see, backtesting in general is the method of looking back to see how well a trading strategy has performed in the past. So backtesting answers the questions, what results would I have achieved if I had traded this particular trading strategy over the past few days, weeks, months, or years? So why does it make sense to backtest? Well, first of all, backtesting has a lot of limitations because some things simply can't be backtested when you're looking back on charts. One of the things that cannot be tested is, for example, fills. You never know when exactly would you have gotten filled if somebody would have taken the other side of the trade. And even if a trading strategy worked in the past, there's absolutely no guarantee that it will work in the future. However, if a trading strategy didn't work in the past, it's also very likely that it might not work at all going forward in the future. See, this is why I think backtesting is great to see if a trading strategy has any validity of being profitable. For me personally, here is the main benefit. If I get solid results through backtesting, I have more confidence in the strategy and it's easier for me to pull the trigger. Let me show you a very specific example. I want to show you something around the PowerX strategy because this is my bread and butter strategy. Now, I'm using a tool, it's called the PowerX Optimizer when I'm looking at stocks for trading according the PowerX strategy. Let me jump on the screen and show you exactly what I mean by this. So here you see the PowerX Optimizer. It's a software that I have developed, not personally, I have a development team that have done it, but I have paid the bill according to my specifications. So what this tool does, just in a nutshell, every day it does find the very best stocks and options for me according to the PowerX strategy. And what it does then, if I'm bringing up one of them, for example, ACLS, that today is a buy, okay, according to the PowerX strategy, it shows me exactly what would have happened if I had traded this stock, ACLS, according to the PowerX strategy over the past year. And it's giving me these results right here. So on a $10,000 account, I would have made $7,267. So that is an ROI, return on investment, of 72%. I would have had 10 winning trades and 7 losing trades. So that's a winning percentage of 52.82%. It would have had a profit factor of 3.13, and the average winning trade is $1,067. The average losing trade is $468. So here's the deal. For me personally, having these numbers helps me to make a decision whether I want to trade this stock or not. I mean, it definitely beats then, I don't know how much money I would have made or lost, or if this strategy would have worked at all on this particular stock here. Okay, I want to show you a few things right now that are super important when you're backtesting. Hey, but before we continue and I give you the 3 tips and I show you a few more things on PowerX Optimizer, let me know, is this making sense thus far? And am I going at the right pace, or am I too fast or too slow? If I'm going at the right pace and this is making sense, do me a favor and click on like right now, because this way I know how quickly or how slowly I should go through these videos, because one of my goals is to give you no fluff, to give you practical things that you can implement in your trading right away to hopefully help you to make more money. So if thus far I'm doing good, click on like. Okay, so now let's talk about the 3 tips for backtesting. First of all, tip number 1, you have to choose the right time frame. Not too short. You cannot just look back over the last week, because this way you don't have enough data. You want to look back long enough that you have also different market conditions. You want to have market conditions where the market is going up, where it is going down, where it is going sideways. You want to have a market that has more volatility and that has less volatility. This way, you know exactly that a strategy performs in different market conditions. Now, when it comes to the time frame, some people say, oh, you know what? The longer, the better. No, that is not true at all. Because if you use too many years of backtesting, the data gets diluted. You see, for example, right now, as we are recording this, it is May 2020. It does not matter how a stock performed in 1972, right? Which is almost 50 years ago. So what is the perfect time frame? Well, it depends whether you're swing trading or you're day trading. The PowerX strategy that I personally use is a swing trading strategy that uses daily charts. And therefore, for me personally, I like to use 1 year. Now, let me show you exactly what I mean by this. And so I'm looking back here of how ACLS or any stock performed over the past year. Because usually over the past year, there will be some times where the market is rather quiet. There will be some times where the market is a little bit more excited. There will be some times when the market is going up, down, and sideways. So this is why I want to see at least a year and at least 12 trades. Now, for this particular stock, we had 17 trades according to the PowerX strategy. So this definitely meets my criteria, and 17 trades give me a pretty good idea if this stock would have performed well over the past year. Now, I'm not planning to trade this stock over the next year or so. I'm only planning to trade this stock for the next trade. And if it has performed well over the past year, it is very likely that it will show a very similar performance over the next trade. Is this making sense? Again, with all the limitations that backtesting had, I think having some data is better than having no data and just say, oh yeah, this stock will perform well. Anyhow, let's move on to tip number 2. Tip number 2 is you need to test each stock individually, and here's why. For example, Apple is behaving completely differently than, let's say, Norwegian Cruise Lines, right? Obviously. And even within an industry, you have companies like Target, and Target is behaving completely differently than, for example, Macy's or Kohl's or JCPenney. So therefore, it is important that you are backtesting the strategy for every stock. And here's why. Right now in the United States, we have probably around 9,000 stocks that you can trade. So the key question is, which stock is best suited for this particular trading strategy, for the PowerX strategy? And that's what the software does for me every night. Every night it is going through all the 9,000 stocks and then finds the 8 to 12 or 2 to 8 best ones that are perfect to trade. So you cannot just say, oh, I'm testing all stocks. It doesn't make sense because each stock behaves differently. Let me show you exactly what I mean by this. So if you look at a stock like Apple, for example, so here is how Apple behaved over the past year. As you can see, mainly going up. Then we had this virus hitting us, right? And the pandemic. So it has been going down, and right now it is going up again. Now let's compare this to Macy's, for example. As you can see, this stock was mainly going sideways and then going all the way down and not bouncing back. Do you see how each stock is different, and therefore you have to look at each stock differently and not go over a basket of stocks, but look at it differently. Anyhow, so that is tip number 2. You have to backtest each instrument. Is this making sense thus far? Before we move on to the last tip, tip number 3, which I think is the most important one, and I want to show you what I personally do right now in order to make sure that the data that we got over the past few weeks while we had this pandemic going on, right? I mean, this virus that basically crippled the whole world, of how we can make sure that this data is not distorting our results. So if this is making sense thus far, you know the drill. Give me a quick like. And by the way, if you're enjoying these kind of videos, and you might consider subscribing to the channel and hit the little notification bell. This way you get notified whenever I release a new video. So let's move on to tip number 3. You have to backtest with the right data. So you need to make sure that the data that you're using for backtesting is representative for normal market conditions. That is a key point. The key here is normal market conditions. Now, if we look back and we go onto the charts here right now, we know that in late February and March 2020, the markets were crazy. Now, again, backtesting answers the question, what would have happened if I had traded Macy's over the past year according to the rules of the PowerX strategy? And clearly, I mean, if you have been following me here on this channel for a while, you know that I said over the past few weeks why we had this dramatic meltdown. I did not trade the PowerX strategy because it is a strategy that is designed for normal market conditions. What I did is I sold put options, so I traded a strategy that I call the Theta Kings, right? So I did something different. Therefore, if right now I look at all these trades and say, what results would I have achieved if I had traded this stock over the past year, I have to exclude the time when I clearly would have never traded it because the markets were crazy. Now, this is where I'm doing something that I feel is super smart. And I'm usually not that smart, but this is why I decided to do the following. From all the results, I want to exclude what happened over the past week because I would not have traded it anyhow. So let me show you exactly why and why it is so important. This tip number 3, backtest with the right data, is probably the most critical tip. So what my software does, it shows me exactly the trading report where it shows me every single trade that I would have taken according to the rules of the strategy. And what you might see, we got a profit of a total of $7,267 based on a $10,000 account. So what is it? 72% RI. But you see that here between 227 and 319, while we had this pandemic going on, we had one trade that generated $4,300. So out of these $7,300, one trade is responsible for more than 60% of the profits. So should we exclude this? Absolutely. Because is it likely that the market will crash again over the next few weeks or months? Maybe, probably not, right? So this is why I want to see what are the results like if I'm excluding the trade. So I want to show you behind the scenes because I promised behind the scenes. This here is the development version. So if we are looking at the same symbol, ACLS, that we just looked right now, and we bring it up, you see, I am right now, this is why it is shaded here in gray, I am excluding the area from February to late March, because this is when the markets were crazy. And here's what you will see that's happening. By excluding it, the profits go down from, what was it, $7,300 to $1,300. Now you look at the stock again and say, would you trade this stock because if you had traded it according to the rules of the PowerX strategy over the past year, you would have only made $1,300. Does this make sense? Let me show you another example because this is why it is so important. You cannot include data that is distorting the results. I want to show you BHC. Right now it shows that if you had traded BHC according to the rules of the PowerX strategy on a $10,000 account, you would have made $9,451 over the past year. 12 winning trades, 9 losing trades, 57% winning percentage, and a profit factor of 3.77. However, if you now look at the trading report, you see that out of this 9,451, 3 trades happened during this crazy time. And these 3 trades are responsible for around $7,000, $6,500, $7,000 of this $9,400. This is not normal market behavior. So let me show you when I'm excluding this BHC, what happens here to BHC. So when I'm excluding these crazy times, you will see that now I'm only making $3,400. Still have 10 winning trades, 10 losing trades, 50% winning percentage, but the profit target went down from 3 dot something to 1.86. See, this is why it is so important that you backtest with the right data. And this is why right now, my development team has worked on excluding it so that we get the right data. So backtesting has its flaws, but backtesting can help you to test if a trading strategy works at all. And that is true for me. It can give me more confidence to pull the trigger. Because let's face it, what is the one thing that makes traders not pull the trigger? That they don't have confidence, that they don't believe in the trading strategy, that they second guess themselves. I know that for a fact. That's what I did in the beginning of my trading career. I saw a perfectly great setup according to my strategy, and then I was wondering, should I actually enter this trade or not? And you snooze, you lose. By the time I made the decision, the trade was already gone. Anyhow, so if done right, backtesting is an important tool for a trader. But this is why you need to apply these 3 tips that I gave you in this video so that the backtesting results are in fact relevant results that you can use in your trading. And when you do it right, it will help you with your confidence and make sure that you are trading a strategy that has all chances of success. Always keep in mind when trading, we never know for a fact if something will happen. We don't know for a fact if in the future the strategy will work. It's all about putting the odds in our favor. And this is what backtesting can do. It can help you to put the odds in your favor that you are trading a strategy that works. Hope that helps. And if you enjoyed this video, there's a few videos right now popping up on the screen. Just click on any video that you find most helpful. And if you enjoyed this video, click on like and consider subscribing to my channel, because this way you get notified whenever I release a new video or when I go live. And I'll talk to you soon.